Shares of Facebook's parent company, Meta, moving higher in after-hours trading in the instant reaction to the company's report of first quarter earnings. Joining us now for a deeper dive into the report, Brent Thill, who is the Jefferies equity research analyst. Brent, great to have you here with us to react to these earnings. Better than feared, our colleague Jared Blickery had kind of attached to this earnings report, and particularly mixed bag, as we had seen. Want to get your reaction.
Yeah, I mean, the fear going in was so high, and that's why you're seeing the stock up 10%. It just got drilled. The stock was, 12, 13 times earnings. So definitely got overcooked going in. But, the numbers, obviously, slight revenue miss. Bottom line was in line. The guide was not good, -4% to +3% growth range, which is basically indicating the midpoint, no growth. Now, remember, they had a 50% growth comp from last year. So that's a difficult setup. They got some users back in the system. So 2.87 billion, up 50 million sequentially. So I think the worry of them losing users, clearly some of those users came back. And, the buyback dropped pretty precipitously. They bought $19 billion worth of stock in Q4, and they only bought just over $9 billion in Q1. So, I mean, it's a mixed bag. Clearly, the rest of the social between Snap, Google, you look at the numbers, they've all had some seasonality. You've had big comps, post-pandemic hangover. Are we looking at, Facebook? Are we out surfing or playing golf or running or whatever you like to do, right? You're probably out and about. You're traveling. Look at the car rental and airline data. Everyone's back out. So I think, in the short term, we've got some headwinds for the industry. And again, I don't think they're out of the woods yet. But you got to get through this Q2 comp. In the back half of the year, things get easier. So I think investors that are value-oriented, not growth-oriented, value-oriented, are basically driving the parallel to what happened to Microsoft and Adobe. Great franchises in tech have pit stops. Facebook's in a pit stop, and they're trying to figure out how to get back on the road with better tires and better undercarriage and a faster driver and more fans, and it's going to take some time. It's just going to take time.
So Brent, does this give Meta then some breathing room in terms of waiting for some of the investments it's making in other areas of its business, especially the metaverse, to really pay off?
Yeah, I think there's some breathing room. I think it's, remember, the bulk of this business is ad driven. And I think the way that they've painted the metaverse is this is created over the next 5 to 10 years. It's not created, next year, next quarter. It's a 5 to 10 year evolution. And ultimately, I think it's smart what they're doing is saying, look, we're laying the pavement for these new avenues of growth. If you go back to the Microsoft analogy, right? Everyone thought Microsoft was dead because they were the operating system company, and they effectively gave birth to Azure, Microsoft Teams. And we think Facebook can do the same thing. And so right now, everyone's just focused on the ad business is dying, users are leaving, TikTok stealing everyone, and they're toast. And I think that's the wrong takeaway. I think our takeaway is that they're sitting on a great asset. It's transitioning. It's not all going to invert to the metaverse overnight, but the ad model is there. They obviously have had Apple and others and supply chain issues and the post-pandemic hangover, to digest, and that just takes time. But we ultimately believe, that they're in a good spot and that they can fight back and they'll come back. It's not going to happen in 1 or 2 quarters. So for value-oriented investors, you're going to make a lot of money below 200, in my opinion, by betting on can they turn this. And I think that below 200 at that multiple, you really don't have a lot of downside when you're paying 13, 14 times earnings.
Stock's still down more than 40% year to date. Do you get a sense they have weathered the storm from Apple's privacy changes, figured out how to navigate that? And what do you expect to hear in the call at 5 o'clock Eastern?
I think they're getting through the bulk of the headwinds. Clearly, now everyone's turned the attention. Is Apple going to use this data to create their own ad business? Are they going to be more competitive? Ultimately, I don't think I don't think Tim Cook can afford to lock down everyone's privacy and then create a big ad business off of that. He can create an ad business off his own network, but can't use that to his advantage. So I think Apple is largely, the headwinds are in. and I don't think they're all the way through it, but we think they're farther and there's light at the end of the tunnel. Snap said this on their Q4 call, that they felt like they were navigating through it better than most. And so, their targeting systems are way worse than Facebook. So by definition, they're getting closer to the end of this. But I think it's still a hangover on the business.
When you were comparing Microsoft and that long period of time that they were making strategic investments to ultimately position them for where they are today, and the parallel now that we perhaps hope that Facebook will be able to mimic in terms of the playbook that Microsoft was able to do over the years, there's one core difference that I think about, and it's the consumer sentiment. Does Facebook, even if Microsoft was looked at as perhaps a boring company that was weathering through its own legal challenges, does Facebook have the consumer sentiment both from individuals and corporations in order to experience that type of growth that Microsoft eventually did after all those investments?
I mean, it's a good question because the consumer momentum shifts quickly, as you point out, right? I mean, you look at my kids and they moved quick off of Instagram, off to Snap, right, off to TikTok. But I think ultimately at the end of the day, if they create a compelling product and solution and it's something that's unique, people will be back. Let's use Oculus for an example, right? 2 years ago when we started trying these headset on, it made us sick. We wore it for about 10 seconds and took it off. This last holiday season, every kid that had gotten their hands on it was fighting over it, right? And so they're making steady headway in things like AR, VR. I think shopping is another big opportunity, which is it's really hard to find a platform like Instagram that can target and provide you the type of solutions in gear that you want. And people that use it know what I'm talking about. Like, it is by far the best targeting for commerce. Mm-hmm. So we think, there's all kinds of different angles. Messenger, like, how have they not embedded this into a small business suite to let small businesses run their business and communicate with clients and provide some kind of subscription tier to help these small businesses? I mean, I can sit here, I'm a financial analyst, and I can dream up 10 products they could create on from here that they would get people back. So advertisers who are paying the bill have said, we're not calling them out. Users, no question, have got distracted. There's a better band playing, which is called TikTok, and everyone's watching that band. But look, I mean, Meta can sharpen up, and I'm not counting them out from getting users back. And you saw that in the quarter, right? You saw a slight improvement on the user side. But remember, when they own 80% of the world's internet population ex-China, I mean, you're pretty saturated, right? So they've got a great install base. They now have to take this to the next level and create, products like Reels, like what TikTok has done with that. They've got to figure that out. They got to figure out video. They've got to figure out the AR VR strategy. There are all these avenues we think they'll figure out. Just takes time. And in the interim, the ad business is going to continue to help bridge the gap. And you got to get past these big comps. I mean, you have a giant mountain in front of you in Q2 and that's why they guided -4 +3. I think everyone was fearing that they were going to guide pretty conservatively for Q2, and they did. So I think, it's not as bad as feared, but it's certainly not good by any stretch.
As you said, we're not counting them out just yet. Brent Thill there, Jefferies equity research analyst. Thank you so much.